Hey traders, how we doing today? Happy Monday, happy Veterans Day. Let's get started for the final hour. Thumbnail's pretty fitting because that's essentially what the weekend was getting everybody's attention doing. Bitcoin just ripping through all-time highs. We're officially in the 80s right now. I think we tapped 86 and change. Let's have a look at everything. So, sometimes the market during holidays likes to move like nobody's watching. Technically, it was a trading day today. Grabbed a couple trades out of SPX for some profit, put in some positions on the SPY QQQ, added a position on oil as well. And I think I had one more. I think I added a hedge on MES, micro E-mini futures. So we'll talk about that today. Let's get going. So another new high in the portfolio for the year. That is exciting. Added up some pretty decent profits that are running on crypto. So if I take a look at the portfolio, just going A to Z, have some exposure in the following: BITO, currently up around $16,300. So let me do some math here. So 16,300, and let's see, Coinbase is up around 42.98. Okay. EETH is my ETF for Ethereum. That's up 85.67. Okay, what else do we have here? I won't count precious metals; those have pulled back, but I'm still long GLD. I'm long gold futures. I'm long SI, which is silver futures, and SLV. IBIT up around 25.7. So up 54.8. Anything else on the crypto side? Intel's pulling back, but I'm looking to get it called away around $23 or $24. That's up 12.90. I know that's not crypto, but that was a trade I took last week. Apple at 223, up around $6,800 on Apple. Took that trade last week as well. What else do we have here? I think the only one missing would be MicroStrategy. Oh, MARA, that's up 42.35. Okay. And MO still up about 91 grand. That's crazy. That's like such a good stock. It's such a good stock this year. MSTR up around 83.50. Okay, so I think that about does it for my crypto exposure. Still room to run. I'm going to let a lot of these profits continue to roll in. I'm up $67,450 on crypto or crypto exposure, and I have some other accounts that are running as well. My holdings of Bitcoin, my holdings of Ethereum, those are doing fine. My Roth IRAs had IBIT for the last, since the ETF was approved, and I dollar cost averaged in a few times. But just on my Tasty Trade account, up around $67,000. And so I'm going to remain pretty aggressive and steady on this, not really doing much to get in the way. I may add a little bit more exposure. If we take a look at Bitcoin here, so here's MARA with the big rip higher. We're sitting at $19. $19 from this candle closed last week on Friday, and this thing is just ripped higher. Earnings will be tomorrow afternoon after close. You got to wonder if MARA comes in positive with a good earnings print. You look at MicroStrategy. I mean, basically, this is trading like if you thought Bitcoin couldn't be more volatile, just go ahead and trade MicroStrategy. It is insane. I mean, even well before Bitcoin crossed all-time highs right after the election, MicroStrategy reached all-time highs back here in the middle part of October. And it's up another, even post-election, or even since that breakout. I mean, MicroStrategy is up another 66%. And this trade is going really quickly. I don't know. I might. I'm still going to add some exposure on MicroStrategy. I've got an in the money bull call spread of 375 by 390, so my max profits around $11.70. Obviously, it's moved so quickly that the time is way out there, and it's going to take a while for that one to give me my full $11 profit. But if I could quickly grab, maybe $300 to $400 on the trade and just kind of double this percentage in position without having to wait as long as I have waiting here for the bull call spread. I just saw that note. I want to see what that notification was. What was that alert that just popped up? Oh, come on. What was that? Shoot. I just want to catch that real-time news that I just saw. It has something about MicroStrategy, but let's see here. Traders who shorted MicroStrategy, a key Bitcoin investor, faced losses of, oh my gosh. Traders who shorted MicroStrategy, a key Bitcoin investor, faced losses of over 1.2 billion from November 6th to November 8th, contributing to total losses exceeding 6 billion for the year. Unbelievable. I mean, yeah, I guess everyone, that's what makes a market, right? You got buyers and sellers, but those people probably feel pretty stupid. Anyway, here's Bitcoin. Just relentless. So, I mean, the 5th to the 6th to the 7th, I mean, the day after the election, Bitcoin's been on a rip. So from the election onwards, Bitcoin's up around 25%, and that is 1, 2, 3, 4, 5, 6 trading days. And that's 6 straight trading days because we have 24/7 trading, right? We're sitting at 86,990 right now. I don't know how quickly this can get to 100K, but it seems to be well on its way. Obviously, a pullback would be great. I'm not holding my breath, though. I mean, if we have something like this, where this type of momentum and it just pauses, I'm not going to short that. I'm just going to let this thing continue to melt up. If it pauses, melt up. Once we get into my 100K area, then those trades that I added up, I'll see what that total is. And probably start taking some profit. I'll keep my exposure on IBIT, FBTC. I'll keep kind of the spot exposure. MicroStrategy, I haven't even had a pullback that I wanted to participate in. I've just been using, credit spreads, debit spreads. I've been using ratio spreads, like everything except just buying MicroStrategy, which I could just dollar cost average into it when it's trading at $100 or $200. I mean, it should have been a nice no-brainer to just throw in like $1,000 here, $1,000 here, and obviously not be able to control options around it. But anyway, it is what it is. So I'm still participating, I'm still profitable, but the ones that are the most profitable are just simply the spot ETF. So IBIT, FBTC, looking the best. I mean, this had a big gap up from 67 all the way to 76. IBIT from 43 up to 49. BITO even making a big run here. This one's going to be interesting because this one is probably the one that offers me the most leverage. And the trade that I'm in, so I've got some naked puts down here on BITO. This is up. Let me see, like percentage wise, is it also up 25%? So since the election, which would be this level here, that's Tuesday the 5th. So from the 5th through the election, yep, it's right there, up about 25%. If we go up to hit 100K on Bitcoin, and this actually follows through, my call options alone would probably be worth another, I don't know, maybe another 30 to 50%. And I probably will take or I'll at least move stop losses, or I'll take profit on those call options, even though I'm out for a long ways. I mean, I bought this call option. It was an in the money call option for $5. It was dirt cheap, all things considered. And that $5 debit hopefully is going to be worth, let me see what it's trading for right now, actually. So here, BITO, that $14 call option is right now, should be worth like $13. It's 2 contracts. So it's trading for about $8.50 to $9. I'm sure the bid mid ask is a little bit wider. I could probably get out of this thing for $9 if I wanted to. That would be just shy of 100% gain over the last week. But I mean, I bought this intentionally out to 2026. I'd like to see this go higher. If Bitcoin is going to rip to 100,000 or higher, then I'm curious if this gets up into the high 20s and we continue to see, deltas moving higher. I mean, right now I went from like a 70 delta to now a 97 delta. So basically every dollar that BITO goes up, I get $1 in credit on my call option. So right now, great. If we go up to, let's say we get up another, I don't know, let's just say $5. Well, if we go from 23.56 in price, that's another $5 on my call options that I get. So for even 2 contracts, I mean, $5 a movement will give me another $1,000 a profit. So I do that on 9 accounts, and we're talking what, $9,000 with a $5 move. So it's there. But because it's an option trade, and if we have any type of hesitation, I know there's time in this trade, but If it just is straight bullish, I think I'm just going to be happy with a decent chunk of profit. Who wouldn't be? All right. Francois, good stuff. Daily profit play, 10% of the first one, 35% of the second one. Very nice. The day itself was pretty cooperative. It's only 45 minutes left to the close. We've had a pretty good day overall, outside of that little fall from around noon today. So from noon to 1:30, the market did sell off a little bit more on the SPX. That was certainly more directional. So if you were playing the chop in here, that was really solid for a couple of hours. And then from noon to about 1:30, directional, and then after that, settle back in for more chop. So yeah, I mean, outside of that little move, and I'm not in it, but we had two, win one, win two, on SPX, and that looked pretty good. So probably not much to do for the rest of the day. I'm wondering right now if I do like an NDX trade, could we see? I mean, I doubt we're going to like 21,190. I don't think we necessarily break the lows on the day, but I try to stay the heck out of the way. Can we go to like? Let me find something here. Let me move this out of the way. I'm going to see if I can grab something on NDX cash settled. Let me see what I can get. So if I go trade for today, upside we'd be around 21,190. So 21,190 on the upside there. Okay, that's offering nothing right now. That's unfortunate. 21,180. A little bit more potential. Not really, though. 10 cents credit. Okay, and then on the downside, if I stay out of the way, 20,900 perhaps. 20,900. Nothing great. Yeah, I mean, it's a stupid trade. After financing and everything, I'm going to make nothing. So it's not worth it. Yeah, I'm just happy with the 2 daily profit play wins. That's fine. All right, futures market today didn't really do anything. I mean, futures stayed right around that weekly VWAP. Let me move this up to today's 9:30 candle. Let's see when that 9:30 candle hit. We do have, and look, as exciting as this was to see all this movement from last week's election into this, I mean, look, it's Veterans Day. Equities were overall like pretty quiet, but Bitcoin just kind of took the headlines and ran with it. So if you had any type of crypto exposure that was bullish, today feels pretty darn good. Okay, but equities itself, like it was actually a pretty flat, pretty quiet day. We do have CPI data on Wednesday and PPI data on Thursday, and I'm as curious as anybody like what that's going to look like. So here's the 9:30 candle. Right there's my 9:30 candle on the NASDAQ. And then let's find that 9:30 candle. I think it was this guy. That's 8:30. There's 9:30. So kind of a chop fest for my 15 minutes right there. So we have a break, retest, and go. There's a little bit of points there. Not a ton. I mean, if you shorted 34, 43, stop loss above the highs, you got a few points. I mean, from 38 down to 18, you got about 20 points in the S&P today. As far as the MES contract goes or ES contract goes, and then Q is a little bit more volatile. Breakout here, 21,170, pulled back into that candle about 50%. I mean, a couple of levels, stop loss above. You're looking at 206 down to 100, so about 100 points. Yeah, 100 points on the NQ today. I mean, it's better than nothing, considering it was just hanging out and hugging this weekly VWAP. There really hasn't been a lot of separation. All right, what else we have going on? Dollar. Oops, don't do that. Don't do that. That would be S&P here and NQ here. Ah, darn it all. There. And there. There it is. Okay. Now I have my S&P and my NASDAQ plus my breakout candle. All right, let's get out of the workspace before I ruin something. All right, so we talked Bitcoin. Let's go volatility index. Volatility index, big post-election break. I saw this yesterday on some weekend reading. Let's do a little VIX term structure because I believe we're heading back into contango, ladies and gentlemen. So we have the market is now anticipating lower volatility. Okay. So we're anticipating that the volatility index is back in contango, which means that your your short-term VIX is at a lower price than your longer-term VIX, which is what this instrument should be doing most of the time. Literally last week going into the election, it looked like this. We still had backwardation for a couple of months, and then it started to bottom out, and then it was going higher later. So backwardation meaning that the near-term VIX was way more volatile, expecting way more volatility than medium to long-term, and that's completely flipped now that the election is done. So this would be probably conducive for selling premium, or I'm sorry, not selling premium, but selling volatility rather. And how low does the VIX go? I don't know. If we come down into the lows again in the low teens, then I will possibly consider some trades going long volatility. I'm curious if the XVXY, this is back up to 52. If we get a gap fill in here, I do have some exposure on this one. Let's see what this one's up right now. I think I had some plays out towards the end of the year. SVXY. There we go. SVXY. Check on the old portfolio. SVXY right there. Currently up about $500. I've got a 55, 54, 53. Those are all puts. If I took any ownership of it, I'd own the shares around $54, and I would definitely repair them. Having 300 shares, make $1 a share. Like I'm not looking to hold this like long term or anything, but this is a pretty inexpensive way to play the positive drift of the S&P. So SVXY I do like quite a bit. I also have a put during that August bottom, $35 that I still collected. A little income trade there. So there's some more time that's needed. I mean, I've got 58, 63, and 65% of the profit. If we get higher than my $54, $55 strike, then these start to look even better. By the end of the year, if we're sitting at all-time highs or near them, then these should all be looking good. This expiration is December 20th. So just a quick spot check there on SVXY. Let me set a chart alarm in this one at 55. This would be above all sell put levels. Okay, so not too bad there. All right, what else do we have? Dollar index. I measured this out this morning. Something to keep an eye on since we did break the election candle. Would be looking to see if the dollar. I mean, you can see on my chart here there are a couple of spots. We do have resistance. We do have resistance. Connect the dots there. We do have resistance there. This could be a spot-on rejection, maybe. But before I say, okay, the dollar top is coming, I mean, I would just let this thing roll over and give us some confirmation on a smaller time frame. Okay, if for whatever reason this dollar is like, I mean, this has been the argument that the dollar's like the cleanest shirt in the dirty hamper or something like that. So I mean, if the dollar keeps getting stronger as well as the equities market going higher, that's an odd correlation, but it could happen. So until I have confirmation to really say, hey, I think the dollar is going to sell off. I mean, I measured a move today where if we have our election breakout candle, I have a 50% measured move around, I'll find the exact price points here, but we're looking at a measured move that doesn't help. A measured move around 106.25 and 107, let's say 107.15. So if there's more upside, the dollar can just hit that 50% and 100% breakout level. But I would be watching for those breakout levels to then hit resistance to fade or resistance to fade back up towards these multi-year highs. I mean, the highest the dollar goes, in my opinion, would be like 110. I don't necessarily see that playing out though. So I think we should keep an eye on the dollar. This level looks good for a potential rejection. If it doesn't happen, this is why I'm not forcing any sell trades without confirmation. So keep an eye on the dollar, but since we had a post-election breakout, if it holds that candle, then off we go, off we go, off we go. Hit measure 1, hit measure 2, and we get back to these multi-year highs around 107. From 107, way more interested in looking for a short. U.S. oil. Oil is actually down in the day by about 3%. I put in a fairly inexpensive bull call spread on oil. I traded CL. I'm going out towards the beginning of January to see if we actually hit a floor or hold a floor in oil. If we don't, then I'll risk it. It's like $230 risk for 270 reward. There's my trade on CL right there. So I'll ride that one out till January. Natural gas is pushing higher. Interesting. I'm not chasing that thing, so it is what it is. Gold, watching gold for a couple of levels here. We've got a nice solid pullback. I think we're around 6 or 7% from the all-time highs. Gold's pulled back about 6%. Now, I like gold. I'm looking to be long. I have a daily chart that shows a nice confluence between the 236 pullback level, which is around 2560. Okay, so 2560. And that also coincides with a 100 period moving average on the daily. So my next level of entry would be on GLD, GC, likely getting long around that level. So I'll add this. This would be my second one because I added in right around that 50 period. I added in there. So that's one. That's two. We come back to the 200. In between the 144 and the 200, that's going to be my level 3. Okay, am I going to exit these trades? No, they're going to be risk defined using options, and my expiration is going to be out to 2026. So when I'm talking about, yeah, I'm long on gold, I'm looking at like a 1% exposure through an options trade that if I'm right, I risk 1% to make 1%. Okay, and if I do that for 3 levels, I'm risking 3% to make 3%. Could I add more to it, more confirmation? Sure, I could take another 1/4%, 0.5%, 1% risks, and just have more confirmation to start stabilizing and buying more gold. But if we're into this little falling knife phase right now, if it's going to be a sharper pullback, an aggressive pullback, I'll just wait. I'll give myself some time in these credit spreads, and then once I start to see there's better stability or just a really good price technically, then I'll probably combo debit spreads and credit spreads with gold. Okay, so yeah, I mean I'm actually happy there's a pullback. I mean, it's been crazy to have traders for months be like, Chris, what's gold going to do? What's gold going to do? I'm like, I don't know. Keep going up, probably. It's like I'm just waiting for a pullback. And we finally got one. So, I mean, pulling back here, now to the 50 period is like, fine, just let it pull back. I mean, if we come back from the 50, find the 100 and that 23% fib, I mean, 23 to 30 to 38, somewhere in this area on a daily time frame, to me, this is an opportunity to buy gold, get a scoop up of gold, and we all end up going to higher highs. I mean, 3K, that's going to be my target on gold. It's fine. I'm fine with that. I can buy and hold. I can allocate with options. I can take risk defined trades. So it doesn't have to be super hard. GC, same thing. Watch your levels. There's my 100 period. I'll see if GLD bounces in a similar way. Futures might be easier to read. XAU might be easier to read. So I'm watching these charts carefully before I get positioned for, a day trade or a position that I can put in during market hours for GLD. Here's silver, also pulling back. How much is this one pulled back from the top? Around 12.25%. Wow. Does that mean it's a huge bargain? I mean, it's right at the levels I want. I took a trade last week on silver right around 31.50. I'll keep it there. Trade on SI, I'm waiting. Trade on SLV, that's what I put in, 28 by 27 last week, right when we came back to that 50 period. Okay, Bitcoin, we talked about 87 and change. What a run, man. Just real quick on this Bitcoin stuff. If we take the kind of election low in this swing, I mean this may not be the true technical behavior here, but even if we have a pullback, I mean just we rip up 25%. If we have just an aggressive pullback or something like that to buy a dip, that'd be exciting. Otherwise, a pullback and a bull flag would be exciting, like something just to not have to feel like you got to buy the highs. That being said, though, I mean I'm pretty bullish. This is why I bought it. Before the election, I bought IBIT and FBTC before the election. I'm looking to take this up towards 100K. My measure move is 108. 108K is my signature move on Bitcoin. So before I start to take substantial profits, I'm looking to see if we have that freedom to run from now until the end of the year. I also wonder, there is an interesting correlation. Everyone's thinking like, oh, Bitcoin's running because it's the non-dollar trade. Bitcoin has probably had the tightest correlation with global liquidity. So if there's money flowing into these markets, it is flowing into crypto. Okay. So don't think for a second that Bitcoin is just on its own island, like it's immune to, inflation. It's immune to the dollar. It's like, look, Bitcoin is going to be as subject as anything else to risk on or risk off trading. I don't know if Bitcoin traders really believe that. I don't know if they ever think that or feel that because it moves so violently one way. But if we have a, big risk off move in the stock market, I don't think Bitcoin is going to be the one thing that's up. Bitcoin's going to be down with everything else. So just keep that in mind. We do have CPI data on Wednesday. We'll see if the market likes it or dislikes it. But even a pullback here, pullback towards like 80s, pull back into the low 80s. That's great. And then we get a chance to buy the dip and sell the rip at 100 plus. Okay. Yeah, I didn't. I talked about that this morning. I meant to do that over the weekend, but the weekend just kind of slipped away. I had a lot of plans going into the weekend. I did a webinar that actually ran way longer on Saturday. I was long like for 2 hours, and then we were out of the house for like 10 hours on Saturday. So came back on Sunday, was just kind of catching the breath, hitting the gym, getting decompressed, catching up on content, and all of a sudden it's 5 6 p.m. Had a webinar. Caught up on some calls, and it's like, yeah, I didn't get a chance to do it. So I'll get it running this week. We'll have some conversations about it during our morning sessions for Daily Profit Play. Okay. All right. Anyway, I'm just going to take a look at this one from the election rip. Do we have any pullbacks? I mean, there should be some volatility here. Maybe we pull back. There's two spots I'd watch for, right? Anything on this little swing around like 30 to 38%, anything around 80 grand, right? 80 grand would be a nice spot to say like, okay, I'll add some more, or pull back into this previous all-time high, which is around 73 or 74,000. I'd like to look at those two spots as a potential breakout or a pullback level. So if we pull back towards 80 or we pull back towards 74, probably a little bit more exposure, some add-ons to the current basket of Bitcoin-related trades that I have. And my target is up here. So if I get some dips and pullbacks, maybe I can beef up my gains a little bit by the time we hit that 100K mark, and then I can lighten the exposure and then just kind of simplify it, keep it into like IBIT and FBTC only. So anyway, we'll see what that does. What was the podcast you recommended this morning? The podcast, it's Adam Taggart. The podcast is called Thoughtful Money, and the gentleman's name that I listened to that was the guest was David's. I don't think it's Stockman, but it might be Stockman. I've got it right here. David Stockman. Yep. Stockman. But the podcast is Thoughtful Money with Adam Taggart. So the title of this episode that I listened to was damn near impossible to avoid a 30 to 50% market correction. Now, that sounds kind of doomy and gloomy. Call that, clickbait or whatever, but it was a really good mathematical, rational discussion on, where the 10-year yield is at, what the U.S. has done, where we've been since the 80s. It actually was pretty eye-opening with that, which I liked. Yep. It's crazy. It's certainly not like super optimistic, but it also is like, you got to get ready for something bad. You got to get ready for something that could be a reality check. It's like, look, man, we can't keep doing this forever. We can't keep adding $1 trillion to our national debt every 30 to 45 days. We can't keep servicing debt to the tune of look, at some point, if we keep this up, our debt is going to be, the service of our debt alone is going to be more expensive than our entire military budget and more expensive than our entire Medicare, Medicaid, healthcare budget. That's insane. So clearly something has to change. We have added 600% gains in GDP since the 80s, but we've leveraged it by 3,600%. So we've essentially been like a 6x multiple of debt to real growth for the last 40 years. I understand it's the new normal, right? You've got debt to GDP and the big number is supposed to be like 120%. Well, the US is at 120%. Japan's at 220% or 250%. I'm sure there's creative accounting ways where it never really matters, but at some point it will, So again, it's not the end of the world. It's not the end of the financial markets. It's just knowing that there's a reality check around the corner. I talked about it this morning in my live session. The 10-year yield is really important. Looking at the 10-year yield, this one should not keep going higher. If it goes higher, look, this is going to be a breaking point. At some point, if this 10-year yield goes higher, it is going to put a squeeze and a contraction where growth is going to be choked out. If the 10-year yield, which is this major financing fulcrum, if growth is choked out and squeezed out, look, companies can't borrow at higher yields. Debt can't be refinanced at higher yields. So it's going to force layoffs. It's going to force tightening. It's going to force contraction. It's going to force all sorts of reality checks that our current economy that is thinking like everything's great and everything's awesome. We're at all-time highs. What could possibly go wrong? Well, this could go wrong. So this is, I think, probably the most important thing we should be watching. If you want to have an awareness of whether we are in a better place for more gains, which I think the 10-year has to go down, or we're in a worse place for gains, and it's just on borrowed time until something nasty breaks. So I hope for the sake of personal finance, as well as any type of debt financing, that the 10-year actually goes down, but I don't know. I don't know what the forecast is. I don't know how technical this behaves. I just know that the bond market is calling the bluff of the Fed right now. Okay. And so if we start to see this 10-year continue to rally, then you're going to start seeing more and more headlines around US is heading into a second wave of inflation. That's all it's going to be. And that's going to be the big trigger word, and it's going to make everyone nervous, and crap's going to feel more expensive like it already is, and it's just not going to get better. It's just going to get worse, And then to put the cherry on top of that, it would be, how do we see that play out in the market? Well, either price starts to do it ahead of everything, and then as the buy the rumor, sell the news, and the Fed has to react to something that breaks, or the final straw would be something to the effect of the Fed finally pivots in December and doesn't cut rates, or the Fed pivots hard in 2025 and doesn't cut rates or even raises rates. And that's if the market even lets it go that long without actually turning. I could see the market turning well before that would even be the case. We could be down 2 to 5% before the Fed decides to also add fuel to the fire. So anyway, just something I've got to get ready for. Am I putting my whole portfolio on it? I'm trying to make, fortune in a bear market? No, because we could just have a correction. We could just have a pullback. We could have a reality check, but it could also get a lot worse. Okay. And I think that the timing of a new election, new president, if we have a Republican sweep, I mean, we have a whole new administration to make all these decisions. And we have said this entire time that most likely Trump president or Harris president still going to be inflationary, still going to be adding to the deficits. I think Trump somewhere between $4 trillion, $6 trillion. Harris probably about the same, $4 or $5 trillion. And I bet those numbers are fudged, and I bet those numbers are conservative, because it's probably more like $7 to $10 trillion. Over a 10-year period, we're adding tons and tons to our debt. So, but nobody cares about balancing the budget anymore. Anyway, enough about that. But I'm watching the 10-year. Tomorrow morning, by the way, at 10 a.m. Eastern time, I will be live with A1 Trading. So Nick and I will be live around 10 a.m. For a 2024, kind of a 2024 what's in play, as well as a 2025 prediction, and also, favorite strategies. So I have a link to that. If anybody is watching today live or watching this recording, it's free to join. It's a free webinar. We'll start at 10 o'clock. So my daily profit play members will be wrapping up tomorrow's session right around the top of the hour. So if we get a trade in, great. The markets are returning, obviously, from a holiday, Veterans Day. It's like the markets were open, but it could have been light trading in the day. You can see that with the lack of direction today. Bitcoin obviously was ripping like crazy. I'm curious if the market is still pretty quiet tomorrow, because we go into tomorrow, still not a lot of news, but Wednesday, CPI. So if we get another really good day of DPP or daily profit play, tomorrow could be a good day for that. Okay. So let me find the link. I think I have it right here. I posted it in my education updates for Discord. There's the form. Yep. Let's see. Biggest sale of the year. Okay. Let me see if I can just find there it is. Free webinar. So I have it right here in my Discord, but I'll post a link in the chat right now. So free webinar. You can join for the registration right here. So let me copy that text. This is a 10 a.m. Eastern time webinar. Nope, that's not it. See if I can just copy this. There. All So Chris Pulver plus A1 Trading. All right. So that registration link should pop up in the chat, and that's free to attend. You just have to register for the session, and that'll be at 10 a.m. tomorrow. Okay. All right. That'll be a lot of fun. And we have the forecast for Wednesday CPI at 2.4. And let me check Bloomberg as a reference here. So I've got the term structure. We're back in Contango. Let's go to Forex Factory. Wednesday of this week is going to be the 13th. Oh, is it it's Thursday? No, it's Wednesday morning. Okay, Wednesday morning, 8:30. Oh, so it did get updated. What the fudge? Okay, it said 2.4 earlier. Now it's been updated to 2.6. All right, so the forecast is 2.6. The previous print was 2.4. And let's just use this as an example. Okay, what happens on this little histogram if we go up to 2.6? Okay, what happens to that 2.6? Well, that just shows for the first time we're going back in the wrong direction, right? If that's the histogram that we have, then we just reverse course. Now, I know that one data point doesn't make a trend, and I know Powell was talking about this a lot last week, and he was pretty much just trying to back it up and say, like, we can still cut, we can still remove the restriction, blah, blah, blah. But at this level, all the way over here, that's where we've been sticky, right around that 3% handle. It's been up 3%, down, like up and down and up and down, just tagging the 3% level and slightly getting below it. So if we print 2.6 on Wednesday, I mean, maybe the market doesn't have a big reaction to it, but if we print another 2.7, 2.8, 2.9 going into December, so our print December, which would be November's inflation news, then we could be showing that we are now from the lowest point to now trending higher as we go into the new year. That can't be a good thing for the market. It can't be a good thing. So I don't know how violent the market would react to that, because clearly it did what it did for the last 12 plus months. What have we done? We made all-time highs through 2023. We made all-time highs through 2024. So the market kind of stopped giving a crap about inflation, right? It gave a crap about employment with higher inflation, which is called stagflation, right? There's no growth, but there's inflation. That's stagflation. But if we get back to this same like sticky 3% level, then we are no better off with inflation than we were back in middle of 2023. We're no better off. And if it continues to get worse, that's going to suck. So I don't know. I mean, I think if we get back into that 3% handle on CPI, the Fed is not going to be nearly as vocal about cutting rates. And I think the market's going to price that in, and the bond yields will continue to price it in like we're seeing it right now. And it's going to be something that's going to be like this lag until like rates go down, or yields go down. So anyway, that's where we're at for this week. That data point is on Wednesday, and then we also have PPI on Thursday. So your producer price index is Thursday. I'd be looking for the year over year on that as well. And yeah, there's kind of your round, round one and round two inflation data. Then we have PCE at the end of the month. The Fed's already stated their case. They cut rates by 25 basis points. The market's still anticipating another cut by the end of the year. Let's see if that percentage changed at all. Nope, 65.3%. So still a higher probability than it was. Well, I mean, this is a lower probability than we saw last week. This is around 70 to 75%. Now it's down to 65%. So I do wonder with a couple data points if this starts to drop and then the pause would start to increase, and all of a sudden we're coming into December 18th Fed meeting at 50-50. So it's very possible this changes, but we'll see. It's all about the market, whatever. Okay, so big day so tomorrow's a big day. I mean, it could be. I mean, tomorrow, if there's not a lot of news tomorrow, we could have like one more good day of really kind of anticipated choppiness. Because if the market's like, yeah, we won't really do anything until we have CPI data. Well, that gives tomorrow a day to just kind of, be choppy, be indecisive. And for daily profit, that could be perfect. But I, of course, want to assess it like I always do and just make sure that price is cooperating. So, all right. What else is going on today? I think that might be about it. So 10:15 to 11 or 10 a.m. to 11 tomorrow. I do have a waterfall income webinar tomorrow after my final hour session. So I'll send that invite out as well. We took 2 more trades today on waterfall income. We are currently 24 for 24 on that strategy. That's live since September, so that's pretty exciting. And hopefully, more to come. All right, so there's that. You can register for the 10 a.m. webinar tomorrow. Harry's saying, do you think we will see a correction to all the rate cuts that have been priced in for next year if inflation starts ticking up and the rate cuts are off the table? Well, the market's already cut back quite a bit. The Fed Watch tool had about a 1% cut priced in for 2025, and that's been scaled back to about 0.41%. So basically, about half the rate cuts that were anticipated have already been pulled off the table. So the market's already expecting less cuts. Okay. Somewhere that the real yield should be something between like this 2-year rate. That's kind of what the Fed is trying to settle into. And then the 10-year is just that really weird financing fulcrum, like I said, where it's like everything kind of hinges on what the 10-year does. So, obviously, if you're not in the market for buying a home or refinancing or buying a house, then it doesn't freaking matter. But for everything else, because everyone pretty much grows on borrowed money. We are a debt society, a debt culture that grows on debt and borrows like crazy. So we can grow, so we can leverage. But at some point, and one thing we can look at here is, JNK and credit spreads, like it's not showing any signs of loosening. Credit spreads are still really tight, but I don't know. I just wonder if there's like this just crazy amount of complacency in the market right now where it's like everything will be fine. And maybe it is, but as always, I just don't want to be caught off guard. So I'll sacrifice the 0.25 and I'll sacrifice the 0.5 and I'll take these small little risks. And if I'm right, I'll have some hedges that help ease the pain. But I'll be sitting in drawdowns like most traders. I'm not trying to make my fortune on bear markets because they're so hard and so slippery. So I'm just trying to stay the course. I think this year looks good for the rest of the year. Why? Because nothing is different right now, right? Trump isn't a president right now. He's president-elect. That transfer of power is January 2025. So everything in place right now stays in place. Bitcoin's been the only thing that's been ripping, right? We had an all asset rip last week, and we'll see how the market takes it this week. But if you look at this chart, okay, this is it was like one of the biggest weeks that the market's seen in several years. It was one of the biggest days we've seen in several years. I look at the daily versus the weekly. It's like, this doesn't look efficient to me. So would we pause, we pull back and fill some gaps? Yeah, I hope so. But maybe we drift up towards 605 or 610 before we do that. Maybe we pull back first to give ourselves a chance another buying opportunity before we get to all-time highs again for the rest of the year. And I'm kind of hoping for the latter. I'm hoping we get a pullback first so we can then offer up some quick dips, like, buying the dip somewhere in here and then seeing some all-time highs again by the end of the year to then protect some profit. But if I'm wrong on that and all we do is just keep buying, then okay, I'll enjoy some of the melts up like everyone else. But at some point, this will roll over. At some point, this movement rolls over. I just don't know, when or how and what the plethora of catalysts are going to be to like roll this thing over into a downturn. Okay. Let's see here. Steve, you joined last night. Did I miss it? Yeah, you missed the trades, but it's no big deal. They're not so time sensitive. So Steve, if you got access to the class, go into your one-click portal, your one-click member portal, and go into the what is it? Go into your waterfall income, check out your alerts and updates, and there will be an updated trade tab. Yep. And also, let me do a quick update here on the trade tracker. Let me see if I can go on the trade tracker. I'll add those in as well. So I'll do today's date. So I've got 2 more trades. So I'll add in today's the 11th. And okay. So let's see here. Okay. Just got to move this out of the way. Give me a second. So I'm just getting the tracker updated right now. This is Waterfall income trade number 1. Okay, that's in. And then waterfall trade number 2. I only did 2 trades today on waterfall income. Okay, so those trades are updated on the tracker. But yeah, if you have your one-click member portal, just go into the waterfall income course, check out your alerts. It should be an update, whether it's live update or it's like going to be at the top of your members portal, and you can check and see what that alert is. It should also, if you've allowed the updates to be sent to you via email or SMS. When I sent out that alert, it was right around noon today. That should go straight to your email, straight to your phone, and that's the fastest way to get it. So if you need to contact our support team for that to help you get set up for push notifications or instant alerts on, especially SMS, that'd be a quick way to do it for text messages. Okay, all right. I think that should about wrap it up for today. Overall, no complaints for a Veterans Day. I didn't really expect a lot of action. Let's take a look at the heat map really quickly before we go. So heat map. So we had about 57% of stocks advancing today. We had 38.98 declining. We've got some Mag 7 red, except for Tesla. Tesla just continues to do no wrong. Semiconductors get a little hit a little bit harder. AVGO is down. Nvidia was down. I saw the Amazon pullback slightly, Apple down. This is mild red, so between like that 1% and 2% level. AVGO, some of the other semiconductors, Intel down about 4% today. Interesting. Yeah, semiconductors down. Micron down. Okay, Nvidia down a little bit. I mean, okay, so what? I mean, a day doesn't make a trend. You have some other spaces. I mean, your financials have done really, really well since last week. In addition to, I mean, we had like an everything rally last week on Wednesday, Thursday, Friday. And if you look at like the 1 week performance, for example, I mean, everything's green, right? With the exception of healthcare, they got beat up a little bit thinking like, oh, Trump's going to be president. There's going to be some crazy health reform. Maybe there is, maybe there isn't. I doubt it, but I can't imagine healthcare getting cheaper under President Trump. I already think healthcare is a whole bag of crap anyway. It's like, does anybody like their healthcare in the U.S.? I feel like it's you never know what you're going to get. Policies change, prices change. I never know my insurance is going to cover. It feels awful. I feel like I'd just rather not go to the doctor. So, I mean, I got a broken arm and it's like, yeah, I did a little bit of treatment on it and racked up like $8,000 in bills. And I'm like, well, I guess it's good enough. I mean, this is stupid. And I got a baby on the way in January. It's like, I have no idea what that's going to look like. So life's expensive. So I hate our healthcare system and it's mandated. It's like, does it get better? Probably not. It's like you can hate on Obamacare and all you want with affordable healthcare, but if you don't have an alternative, stop making it seem like it's bad. I just think that private healthcare like we have is it's just awful. It's way too expensive. And I mean, what hospitals and doctors can charge for insurance is like 2, 3, 4, 5 times more than what it actually would cost. I mean, I know there are operations that's like you could get it for like $100 and then the insurance would be billed for like $1,000. So no wonder stuff's expensive. So it's just a whole racket. All right. EL. What is EL? Estee Lauder. Oh yeah, I saw you pop that up earlier. Estee Lauder at 64. Do we just have earnings on this one? Okay, missed on revenue. Estee Lauder is number one. I mean, I don't love the fact this has been just beat to snot for the last how many months. So this started in January 2022. Stock is down 83%. I believe you call that one a turd. Like, I don't care how cheap this is. I don't care how much of a value this looks to be. look, you've got the entire stock market that is up. You've got obviously sectors that are performing well and stocks that are performing well. This thing is down 83%. Why? What are they doing wrong? You know? So I don't know. It's stuff like this where it's like it looks like it's a bargain. Oh well, at one point it was $375. Now it's only 64. Right. But let's look at it fundamentally. Okay. And here's my easiest way to answer. Anybody that asks me a stock question, this is the first thing I do. EL. Estee Lauder. Okay. High level of debt. Profit margins are lower than last year. Dividend not well covered. Large one-off items impacting results. Trading below estimate fair value. That's fine. Earnings are forecast to grow 36% per year. That's a ton. Okay. But price to earnings, price to sales. Let's see what it is. Its price to earnings is crazy high. You'd think for a stock that's down that much, it's just overpriced. So current price is $63.90. Fair value is $72. I'm not touching this thing. I'm not touching it. Peer average is 37. Estee Lauder's at 113 price to earnings. I'm not touching it. I don't know how much lower it's going to go. I don't care. I mean, would I ever get involved in Estee Lauder? Sure. Maybe it's got to be down to $22 and I'll say I'll buy it. That's about the only price I'd even say is even justified. Okay, so I'll put a chart alarm here at like $20. And it's wishful thinking, but if it ever gets hit, maybe we got a bargain on our hands. But it's crazy that you look at what stocks have been up and how many stocks have advanced, and yet this stock is still making fresh lows. Look, I'm in one that's also a big turd. It's Walgreens. Okay, I mean, I bought this one basically for a low dividend or a low beta, non-correlated dividend play. I mean, it's 0.74 correlated, which I'd love that to be lower. It's not negatively correlated or anything. But I mean, I bought some shares around $20 and it's down to 9. So I'm in like a 50% drawdown on Walgreens. Is there value there? Yeah, maybe. Let's go to WBA. Okay. I mean, I don't love this. Dividends not well covered. It's going to continue to get chipped away at, but trading way under fair value. Earnings are forecast to grow, probably because they're closing brick and mortars and they're trying to. I would assume either automate a lot more processes inside the store, or they're getting slimmer on inventory management, or they're just cutting workers. Let's see where the price is at for fair value. So price to sales, price to earnings, dirt cheap. And fair value says $15.90. Well, my break even is like $11. So if it gets to $15.90, awesome. I'm closing out with $4 to $5 a share, and I'm out, and I'll never worry about Walgreens ever again. Okay. But look, it feels weird to have a stock that is somehow not participating in the rest of what the market's direction and sentiment is telling me. So that's one thing I'm going to talk about tomorrow, is this flight to quality or just building your portfolio up with quality stocks. Look, some stocks might be expensive. Some stocks might be, more than you can afford to own. But if you can trade options around these things, I mean, I don't care if I trade nothing but Tesla, nothing but Nvidia, nothing but major large cap tech, just because it's liquid, it's participating in the overall market to the upside. That's an easier trade than trying to buy something that you hope is going to stop going down when it's 85% on sale, but it won't ever go back up. I mean, Walgreens is back down to literally 1996 lows. So we're talking about a stock that's down 91.5%. I'm not asking for this thing to go back up to $50. I'm asking the thing to just get me out at 15 to $20. I mean, 15 allows me to make money. So anyway, just be careful. But you ask me about Estee Lauder, that's my 2 cents. I don't think it looks any good at all. I take it at $20 and that's about it, because there's maybe some value there. Other than that, I'm not touching it. Okay, why not short it? Because it's already down 85%. Why do I give a crap? It's like I've missed the short of Estee Lauder. If I wanted to short it, it should have been at the all-time highs. I should have shorted it when the market topped out in 2022. So it's like I'm just not going to chase something. There's better stuff to short. There's better stuff to hedge. There's better stuff to just, you don't have to trade everything. So I missed it, and I'll admit that. Shopify with earnings today. Yeah, sure. Great. 89.93 earnings coming out. Is it today? Looks like it. Earnings tomorrow morning. Tomorrow morning on Shopify. All right, we'll see. So, I mean, price is already at these. intermediate highs from back in February. So it did quite the battle to get from February highs back to the lows in August, all the way back to those February highs. Just kind of been a choppy stock. I don't know. I mean, there's likely going to be some decent move on it. Shopify expected move going into this week's expiration. I couldn't get the, there we go. So I've got like a $12 to $13 expected move for this week on Shopify. Okay. I don't know. I'd probably wait till after earnings if I do anything on it. So yeah, it's tomorrow morning. So I mean, I missed it, but it's one to watch. I took a screenshot here. Let me find it. Let's go. Here's earnings. Here's some notables this week. Tomorrow morning, Home Depot, Shopify. Aftermarket, we got Marathon, which is, this is aftermarket close. So tomorrow, this is a Bitcoin play. Instacart, that's aftermarket. Cisco is kind of in the legacy tech space, aftermarket on Wednesday. Disney and JD on Thursday. Alibaba on Friday. So I have some highlights with just what I think are notables. Some bigger stocks out there, some that I have exposure on. So I have some plays on Cisco. I do have some Disney shares, and I do have some JD and Alibaba. So today, China was kind of mixed. JD's up to 39. I think I rolled my strikes. Let me see where I rolled my strikes. I did a bunch of this stuff last week on Friday. Let's see here. MSTR, Apple, IBIT, NVIDIA, Tesla, Apple, MARA. So JD, I rolled it to a $40 call that expires at the end of the month. So we have JD earnings tomorrow. If they come in positive, this stock might rip up here towards $42, $43. I might not do anything. I might just let it get called away. I've got a break even at 38.30 now. So if it gets called away, 38.30, whoops, 38.30 minus $40. It's $1.70 on 500 shares. I'll make $850 as long as I get above $40. If it's way above $40, maybe I can justify one more roll into the first week of December and just let it play out. And maybe grab another, if I can grab another 50 to 60 cents, that'd be another $250 or so. I mean, that adds up. That's worth it. I mean, make $1,000 instead of $850. That's worth it. But I'm trying to get this stock called away and not keep all this China exposure. I mean, when I say all this China exposure, I basically have a bunch of options. But yeah, I mean, I'm curious. Like Alibaba has earnings this week, so does JD. So I'll keep an eye on those as well. So let me just go ahead and duplicate this. I'll put it at the front there. So now we can reference that. Okay. Can you believe MSTR has only just hit all-time high? What do you mean only just hit all-time high? This thing's been hitting all-time high since October, like every single day. I mean, look, MicroStrategy is getting a lot of value and a lot of speculation. It's trading like 3 times Bitcoin spot price. Like based on what I see today, and it was something with the price itself is like it's getting a little bit expensive because the company itself is worth not what this is, but it's not about the company. This is a story, okay, and this is a Bitcoin story. And Michael Saylor is one of the biggest Bitcoin bulls out there. And when Bitcoin is ripping the way that it is right now, the guy that has 130,000 Bitcoin to his name and a company that's right along with it that looks like it's the greatest thing in the world. I mean, it's benefiting, but I would expect some pretty amazing volatility around it. I just wonder, does this stock with a big run in Bitcoin, for example, does this stock just absolutely outperform Bitcoin, which is crazy, right? If Bitcoin it's already up over 100% for the year. Let's say that Bitcoin goes to 150K. Okay, so it doubles from now. Does that mean that this goes up to $680? Maybe more. So, I mean, I think it's impressive. It's crazy. I'm trying to keep participating in it. I just know that, it could be, if I'm not it's just playing with fire. So I either dollar cost average into what I'm comfortable with, or I just keep trading the options the way that I am, and I'll just lag behind it and just scoop up my income along the way. So if all MicroStrategy is going to do is keep doing this, higher highs and higher highs and higher highs, if I just scoop up some credit spread, debit spread income, probably credit spread, if I just scoop that up along the way, I never have to own a share of this thing. I don't tie up any major capital, and I could still make 0.5 to 1% on every one of these trades. So I can do that, right? But there's also likely going to be a lot of volatility along the way, and what goes up could also come down very violently and then base out. And so I would say if Bitcoin is up 10%, this one might be up 20%. But if Bitcoin is down 10%, this one could be down 20, 30% as well. So I think it's a two-way street. So it might be what looks to be the easiest way to trade until it changes. And that's why when traders ask me, Chris, what about this leverage ETF on MicroStrategy? I don't like it. I don't love it. I don't trade it. But to each their own. You can be as crazy as you want. Okay. All right. I'll let you go. It's closed about 4:05. Let's do it again tomorrow. Hit the thumbs up button for me. I'd appreciate that. Like the channel, all that good stuff. In the description of the channel, I've got links for some alerts. I got some links for my courses. I got my practical options. So stuff like that, have at it. I've had some really good feedback on the practical options. A lot of that's going to some of my premium services. So if you are a member, a VIP member, lifetime member of my waterfall income, or a lifetime member of my daily profit play, or you are a Pulver Alerts Gold member with A1 Trading, I'm giving away my practical options course included with those purchases. If you just want the course a la carte, then I've got it on my on-demand page. It's on YouTube. It's on it's a Vimeo on-demand page for $4.97, and there are, trying to think, there's 11 videos. It covers 13 core strategies, trading options, and I would summarize the practical options course like this: if I had to teach somebody from scratch how to quickly get up to speed with options trading, this would be the course. I've read a bunch of books. I've taken classes. I've been through the boring, confusing, overwhelming. What are these words? What does this all mean? How do you just tell me how to trade options, man? And that's what I did. So yes, there's reference material, and yes, there's risk graphs and options chains and things you need to know. But when it really comes down to it, it's like, what is the strategy and how do you trade it? So if you want to be bullish in the market, there's strategies to express that. If you want to be bearish in the market, there's strategies to express that. That to me is a lot easier and more applicable than just trying to learn the theory of options, because that's boring. I want to trade it. Okay. All right. Have a good rest of the day. I'll see you tomorrow. Thanks. Bye.